May profits be upon you. Welcome to another weekly Forex Forecast. I am glad to be back. Sorry, I just took off for a holiday and didn't give anybody any heads up. I was totally disconnected and went to Dominican Republic, by the way, and I really enjoyed my stay there. And I relaxed, I recharged my battery, and I'm ready to get back into action. I appreciate you guys' patience, and um, let's get back to business. All right, let's look at the pound USD. All right, we're looking at the monthly time frame over here. If I can get my pointer, no, let me not do that first. Let me move here. Okay, boom. All right, I'm doing it wrong. All right, let's try it like that. There you go. All right. Now, on the monthly time frame, what I want you to see is what I've been looking at for the last several months. All right, the market is moving up. Let me get a pointer. Boom. All right, the market is moving up. Right. Since what day was this? The September. All right, since September 2022, it's been moving up, making higher highs and higher lows. Right, and the deal is it's moving within this ascending channel. Right now, this is after it made a drop. All right, it broke structure to the downside here. All right, took out those lows, pulled up, made a new high. All right, we see the market fluctuate. We break these lows. Actually, it's a uh, what I would call a sweep rather than a sure enough market structure break. But it did create a new low, a new lower low, and then it made this lower high. It respected the previous high before it, all right, and kept that protected. And then it actually traded below this low with this close here, all right, and that's another break to the downside, another bearish break of structure. All right, from here, it's been moving up. Why is it moving up? Because it's heading towards, not, it doesn't land there. It heads towards that high here. All right, the protected high, but this is a pullback. This is a pullback. All right, and this is why I have this Fibonacci retracement tool up here. All right, if we move the high over here to the high of this trading range, and we have it at the low already, you can see it's pulling back towards OTE levels, right? The OTE levels are between 618, 786. This one exceeded it, didn't it? Went to the 886. The 886, very rarely seen, all right? But you see that it swept the high here before we had two bearish months, all right? Almost a complete 2 months. We're 2 days from completing the month of March. But I want to point it out that last month, bearishness continued into the current month's bearishness, and we're almost complete with that. I do believe we are heading towards this low. Yes, I do. I think that this pullback is going to prove to be over once it takes out this low. All right, this low is the lowest point between these two highs. All right, and that makes it an external low, an external low. All right, once we break that, that would represent a shift in the market from bullish to bearish momentum. Okay, and that would make me, uh, that would validate taking lows, and you wait for a pullback on a lower time frame, and then you get in and ride it down towards the next low, which is the second point of contact on this ascending channel. All right. Now people are saying, why are you using trend lines and channels and stuff? Well, I only mark structure with them. And as long as uh, other traders, other investors, other institutional players are respecting this line, look how it was tapped here. All right. Yes, went past it, it went past it, and then it came right back to it. again and hit it exactly to the pip again on the third one. Came down, tapped that low to this low, and we didn't go through any candle bodies. This is the way I like to mark it, and I only use it to spot structure. All right, I think we're going to be heading down to this end here, and I look to see what the confluences are. All right now, so we can keep this thing simple. We have three up close candles, and we have strong momentum to the downside. There was a gap right there. I'm thinking that we are going to hit that low almost with a lot, just like I'm almost 100% on this. But there's a high probability I think we're going to hit that low. And that's going to be, once we do, there is the support line, the support side of this upward channel. But I think for me, this is a bearish configuration because we already swept the high side. We already swept the buy side liquidity here. All right, which would mean there's good reason to head lower. If we're not, if the market isn't offering fair value, it is looking and searching out for liquidity. This is the next liquidity point. Okay, so here we go. All right. Let's see what it does. Now, I also want to bring your attention to the midpoint here. You can see how important it can be because you see we didn't get a close here. We did get a close here below it. We got an indecisive candle right below it. Tap came back and retested it, and then we broke back above it again, respecting that midline again. We finally crashed through it, finally crashed back above it, and here we are again. All right. It closed here, but it didn't trade below it. It came right back through and then went back up. Now we have a movement to close below it. And this, we're only 2 days from this month closing. So I'm thinking that it's going to close similar to how it looks right now. And if we go down to the weekly time frame, let me get out of this, you'll see how there was a lot of rejection up here. You can see how, come on, man, why you did that to me? Why did you do that? There's a lot of rejection here, right? Not hard to see. The market tried to pull back up and and move higher, but what I want you to notice is that this candle right here, this movement right here, is was pivotal because it swept the highs. This is that high sweep over here, that buy side liquidity, and you see, this is the last low before this high is made, before the break in of that low. I was going to say break instruction before the market broke higher and swept this high. It created this low, and when the market decided to pull back and started trading below that low, excuse me, it created a market structure shift. And that's what I want you to see. This is a market structure shift from bullish to bearish momentum. I'm starting to lose my voice. Excuse me. All right. I'm turning away from the mic. Hold on a second. So, what I'm looking for is more downside. I look for the market to pull up as it takes out a low like that, a very important low, and head towards these lows here. Boom, 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 boom. And this is the first candle, the way it closed last week, the first weekly candle that, it tried to go higher. It tried to go higher, but it failed. Ran into that rejection block. And in the process, I want you to also make note that it swept the previous weekly high, right? Meaning that it has less of a reason to continue back up there. It already swept the previous weekly high. Yes, it could come back and sweep this high and go into this rejection block. It most certainly can. But because of the way it closed with almost no wick, lets me think this is a bearish candlestick formation, and that we're probably going to see some more declines. We're likely to see more declines, and I'm bearish in this market. Now, we'll come over here to the daily chart, and you can see it chopped its way up to sweep some liquidity, some buy side liquidity. Didn't quite get as high as I would have loved. If it would have swept this high, I would have been great. I would have been like, yeah, we're definitely going down. But because it didn't, it leaves the probability, it leaves a small probability that the market may want to revisit these highs up here, and that's fine too. But the fact that there is, there you go. The fact that there is a displacement here, where you see a bearish fair value gap, lets me know that there is some momentum to the downside. We've already taken these lows. All right. I'm looking for this low located at 1.32128, and this one here at 1.31796. I want to see. I think there's a high probability that we're going to see the market take those these lows out. All right. Now be wary that the market may let me get out of this. That the market may pull back a little bit, because we're taking out lows, and when the market takes out lows, there's a likelihood that the market may want to pull back, and then before continuing down, I'm thinking that we're going to see we may see a small pullback into this very bearish candle close on Friday. All right, and into the range of this candle. It's not going to be huge, I don't think. I do not think, because I think the U.S. dollar is going to gain some strength, and we're going to pull. We're going to push down further. Look at it on the 4 hour. That is a very that's very bearish looking. Okay, we had a sweep before doing so, and yeah, I think that we're going to see some more declines in this market. Does that make sense? All right. So look for the market to pull back. All right, after it takes out this low here at, what is that? 1.32458. Look for it to pull back into this rejection area here of this candle, and that's a small short-term pullback. But any pullback I would take as I would look for the sell model on the lower time frame. All right, and if I can get a sell model forming in the short term, I would take it to down to the levels that I already called out. Okay. All right. I already put out a couple of videos already for my voice is getting better. For what am I putting it out for? Come on, man. Don't have me up here looking for stuff. Doggone it. Where am I? There you go. All right. For the Euro USD and the US dollar, I already put those out. This one is for the pound USD. All right. I want you to go check those out and make sure you get informed. The very next one I put out will probably look, yeah, it'll be gold. I'm gonna do gold. I'm gonna also put out one for oil. All right. And if I have time, I will put one out for silver. But look for them. I will see you in the next video. Thank you for watching and being patient with me. And may profits be upon you.